now. So welcome everybody. This is the National Building Expert, Lance Luke, here as part of our Ask the Building Expert series. And why do we do this? Well, we do this to help a lot of people in the industry, such as building owners, condo associations, property managers. This specific webinar is helping condo unit owners or realtors that are selling condos to buyers and so forth. So I see that there's people from all over the US. Welcome. I know there's people from California, Oregon, Washington, DC, Las Vegas, and Florida, and a bunch of realtors on. So welcome. And here we go. Reserve study, faults and pitfalls. Now, what is a reserve study anyway? Well, when you think about it, it's a study about reserves. But what are reserves? Okay, so what is it? A reserve study is a long-term capital budget planning tool that identifies the current status of the reserve fund. And what is a reserve fund? If you have a condominium, there's a set-aside bank account specifically designated for reserve components. And this is capital improvement components that need to be repaired and upkept or replaced. And the big capital improvement projects or components in a building, in a condo building, would be the foundation, the walls, your roof, electrical plumbing, your elevator, and other things that are kind of high ticket items. Okay, now, if you didn't know, there's actually 3 types of reserve studies. When you hear the term reserve study, it's not just one reserve study. There's actually 3 different types. And those are a level 1, a level 2, and a level 3. And you may ask, well, what is the difference between these levels? So I'll explain. A level 1 is the best reserve study you can get. It's like if you take your car in and you want your complete check on your car, that's basically what it is. It's not like we're going around putting air in your tires, checking the oil, and that's it. Okay. So a full reserve study is a study that's created brand new. So there's no old stuff. It's a complete inspection. The reserve study provider would look at each component of the building, take measurements, take photos, do background research. And what is the background research? The research would be asking the building operator, property manager, or resident or site manager, whoever's involved, or maybe people on the condo board, for a historic data on certain things. Like, for instance, well, when was the last time you repaired or replaced your roof? And then you take those dates and you go forward, okay? But you don't only accept what the information provided to you, you actually have to go and take a look at the roof yourself, take measurements, and determine what the actual condition is and how long the roof's going to last, and when it needs to be replaced, what the cost to replace that roof is. So that's a level 1. That's the best reserve study you can get. Level 2 is basically an update of a level 1 reserve study with a site visit. So the reserve study provider would take the level 1 reserve study, complete reserve study, go to the property and take a look at these components to determine whether he agrees with what was written in the level 1 or whether he needs to change it. And sometimes they need to change it by decreasing or increasing the expected life, and then maybe updating the replacement cost of each component. Okay, and a level 3 is the update with no site visit. So basically, it's just crunching numbers. And why is it why is it not the best? It's because no one is actually physically inspecting the property. They're just crunching numbers. So if the number is wrong, then you're just going to use the wrong number and add an inflation factor, and then you still get a wrong number. It's going to be a higher number, but it's still wrong. So a level 3 is the most common reserve study with the most errors. And why is it most common? Because it's the cheapest reserve study you can get. A level 2 is a little more costly. A level 1 is the most expensive. So a lot of boards say, we don't need a level 1, let's just keep doing an update. So level 3 is basically called an update of a reserve study, and not really a reserve study per se, although it's commonly called a reserve study. So there's a lot of confusion when people review a reserve study, or a realtor asks for a reserve study because their buyer wants to look at it, and they're giving they've been given a level 3, and then the mindset is that it's a reserve study, but it's really not. It's only a level 3. I'm trying to get my light on. Somehow it's not working. There we go. Sorry, I forgot to turn it on earlier. Okay, so is your component list accurate? And what is a component list? A component list is a listing of hundreds of items in a condominium building. Okay, regardless if you're in a townhouse wood frame building, or a 3-story, or a 40-story concrete high-rise building, a reserve study is basically the same, but the component list may be different. So for instance, at a low-rise townhouse building, you don't have elevators. So, but an elevator would be a component in a high-rise building. Okay, so ask yourself and look at the reserve study and ask the question, is the component list accurate? And what do I mean by that? Are there missing components in the reserve study, such as cast iron drain piping, railing and window replacement, electrical upgrades, those kind of things? Now, you may ask, well, why wouldn't cast iron drain piping be in a reserve study? Because isn't that a component in a high-rise building? The answer is yes, but I've seen reserve studies where they have cast iron drain piping as a component, and the replacement cost is $5,000. Okay. Now, if you didn't know any better, at least it's an item listed and there's an amount there. Okay. But if it's a 40-story high-rise building with 300 units, and when it's time to replace your cast iron drain piping, is it going to cost $5,000? No. $5,000 is not even enough to replace 1 unit piping in the building. But why did they list it as such? If you read the fine print, it says single unit repair maintenance. So basically, it's not for the whole building. It's only for 1 unit. So that's an inaccurate reserve study just based on that one component. So let's move along. Let's talk about the useful life. What is a useful life? The useful life is the estimated total lifespan of the component. And if you look at the image, it's of a townhouse project or condo project. And I kind of like the pastel colors. And the useful life is not the life of the whole building. It's the life of each component, because the lifespan of each component is different. For instance, the roof may have a lifespan of 20 years, and the paint might have a lifespan of 10 years. So you can't combine it all together and say, well, roughly the building is going to last 30 years. No, in a reserve study, each component is separated by identification, and the useful life, remaining useful life, replacement cost of each item is taken into consideration, not the building as a whole. Okay. Now, what else is there? There's useful life and there's remaining useful life. What is remaining useful life? Remaining useful life is how many more years will this component last? Now, if you look at this Mayan pyramid, which I actually saw when I went to visit Mexico, this pyramid is lasting hundreds of years. And so it's a little different from a condo building, because a condo building is not going to last hundreds of years unless you really maintain it and fix things up when you should. It could last hundreds of years if you follow the format on your preventive maintenance, repair and maintenance program, have periodic inspections and that kind of thing. And lastly, replacement costs, which is the cost to repair or replace the component. And here we see a picture of a condo building under construction. So normally when a building's brand new, you have each component like the roof and what is the cost of replacing that roof. So if the roof is going to last 20 years, whatever the cost was to build that roof new, then they plug that cost in. But here's the problem. If you're going to use a real estate developer's reserve study, the numbers may be incorrect. And here's the reason why. If the developer is negotiating construction contracts, and let's say they're building 1, 2, 3 buildings at a time, they're able to get a bulk discount or a reduced price because they're building so many buildings using the same contractor, okay? And that's the developer's cost. That's not the condo association's cost. When it comes time for the condo association to replace the roof, they're not going to get it at the same price the developer got because they're only one condo. They don't have multiple condo buildings and they can get a fairly discounted rate because they have multiple buildings. Okay, so that's the caveat on using a developer's reserve study. Now let's talk about some faults and pitfalls in a reserve study. And basically, if the reserve study has wrong information, then the reserve study is going to be incorrect or erroneous. And I've actually completed reserve studies. I'm a consultant on reviewing reserve studies and doing inspections. And I've also probably reviewed over 2,000 reserve studies. So when I review the reserve studies, I can basically see what the faults and pitfalls are. And I put together a list, which I'm going to give you this information that probably not too many people tell you about. So, listen up. As I mentioned before, missing components. So I reviewed a reserve study done in California. I think it was in San Francisco, and they didn't have a component for the fire safety ladders. And as you can see, it's made out of metal and there's a lot of corrosion. So if you're missing a component, and let's say it costs $20,000 to repair or replace, now your reserve study is $20,000 short. Okay, so make sure that you don't have any components missing on your reserve study. And sometimes there's a reason why a component's missing. It may be that it's covered in their operating expense. There's 2 types of budgets for a condo. There's your operating expense budget and there's your reserve study budget. So if a certain component is actually in the operating budget, then that's fine too, provided that that missing component is allowed to be in the operating budget rather than considered a reserve component. Okay, so that's important. Another problem is the incorrect useful life, remaining life, or replacement costs. If any one of these is incorrect, your whole reserve study is going to be kind of skewed and not correct. So if a useful life of a component is not correct, remaining life is not correct, or replacement cost figure is not correct, it throws everything off. Now, it's not too bad if you have a small component and the dollar amount is less than $10,000. That's small in context of a huge reserve study. Now, if it's a major component, such as your roof, elevator, air conditioning, electrical, plumbing, concrete spalling repair, painting, waterproofing, if any of these components are off as far as erroneous information, the bad data results in a bad reserve study. So how do you know, if you're a layperson, which is correct or not? And I'll be able to talk about that. Now, the actual case studies we're going to talk about, but before I do that, I basically mentioned the different types of reserve studies and the different components with respect to replacement costs and useful life and remaining useful life. There's one other thing I wanted to bring up, and that's your funding plan. And be aware that if you're giving a reserve study to review, let's say you live in a condo or you're buying a condo, and you give the reserve study, look at it, and everything looks good. The question to ask is, what is a funding plan? Because a lot of reserve studies, their funding plan is based on 50% funded and not 100% funded, which in Hawaii is legal. So what does that mean? That means that if a roof costs $100,000 to replace, and you need to replace it in 10 years, they can base a reserve study on collecting only $50,000 when the 10-year period comes due. But in actuality, the association only has $50,000 to replace a roof that costs $100,000. So you see the fallacy in such a reserve study. So you want to know what the funding plan was for that particular reserve study. And most plans are 50%, they're not 100%. So you want to make sure that it's a cash on cash situation where when that component comes due and it needs to be repaired or replaced, there's 100% of cash needed to replace the roof, let's say. Okay, so let's talk about actual case studies. And the reason I'm bringing this up is because these are condos that have actually completed reserve studies. So I have a good history. There's a nice luxury building in Kaka'ako, one of the first luxury buildings called Ko'olani. And I happened to do the reserve study after the association took the project over from the developer. And interesting enough, when I did the reserve study and people really didn't believe the numbers, it came out to be that their maintenance fee needed to be increased by a minimum of $250 per unit, depending on the size. So what does that mean? That means if at the time their maintenance fee was $550, the next year it had to be increased $250 to $800, which was a 45% increase. Now, that's kind of crazy, right? And the unit owners were going, well, what happened here? How come all of a sudden we have all these increase in costs? And I said, well, it wasn't an automatic increase. It was that the numbers that were put in the initial reserve study were way too low. And they asked why, and said, well, sometimes developers want to make the maintenance fee low, so it looks better to sell the units. Okay, but if the maintenance fees are low and it's based on accurate reserve study and operating expenses, then then it really is low. But it's based on numbers that were too low to begin with. Of course, everything is going to be wrong. Okay, so all the realtors here that are listening and watching, if you're selling a brand new building, condo in a brand new building, and there's a lot of them, be sure to review the reserve study and ask the question, who made this reserve study? Was it done by the developer? Did the developer hire a reserve study person to make this reserve study? And really, you may want to get a reserve study person to actually review the reserve study and determine whether the numbers are correct. And if you're paying $1, $2, $10 million, you know, if I was that person, I would pay somebody $1,000 to review the reserve study to tell me whether it was valid or whether there was inconsistencies or whether there were problems in it. Because I sure don't want my maintenance fee going up, especially after year 1 or year 2, and it goes up, by 50%. That's not wrong, right? If it goes up that much, you got to ask yourself, something must have been wrong to trigger this. Okay. The other thing is that if you want to compare, you look at the unit that you're selling as a realtor, or you look at the unit that you're buying as a condo buyer, and you look at other buildings in the area that are similar in size with same amenities, and look at what their maintenance fees are. Okay. And so if all these other buildings that are similar in size and similar amenities, the maintenance fee should be about the same, maybe, within a range of 15-20% range, plus or minus. And the red flag is if all these other similar condo units, maintenance fee is $850 a month, and the one you're buying is $550 a month, you have to ask yourself, why is it so low? Is there something I'm missing here? And the answer may be, it's low because the numbers are wrong. The numbers are incorrect. The numbers are too low. And this isn't a brand new condo I'm talking about, but you do the same procedure in a resale condo, and you compare the maintenance fees, and you want to get to the bottom. Why is the maintenance fee so low? How often has the maintenance fee been increased? And you might hear, oh, well, we have a good board here. Our maintenance fees hasn't been increased, for 3 years. To me, that's a red flag. I would say, oh yeah, that's nice, but do you guys actually have enough reserves to cover things? And is the reserve study accurate? If not, that's why the maintenance fee hasn't been increased. But it doesn't make sense to have no maintenance fee increase if the operating expenses increase, unless you have a huge operating budget and a huge maintenance fee budget, and then also a huge reserve study budget, and you got all this money in the bank and you got extra money. Okay, that's very rare, very rare. If you find a condo that has all this extra money, I would like to know, and I would like to see the reserve study, because something doesn't seem right. Okay, so I got another couple buildings, Yacht Harbor Towers. This is like two large buildings, and I actually did the reserve study, and here's the story on this. So I did the reserve study. It was completed, and I was asked to attend a town hall meeting to explain the reserve study to the owners. And I did not know that the town hall meeting was going to be jam-packed with unit owners that were already upset. And there were so many unit owners, the meeting was held in a hotel ballroom. And I didn't really have a clue. I thought I was just going to go there and explain the reserve study. So before the meeting, the board treasurer came up to me and said, oh, are you the guy that did the reserve study? I go, yeah, I did. He goes, well, let me show you our, um, our budget just to confirm that we do have 2.5 million in reserves. And he showed me the bank accounts and verified, and he said, I'm the board treasurer. I certified that this is how much we had, and we're in good shape. And I said, what do you mean by that? And he said, well, we have all this money in reserve and we're in good shape, right? And I said, didn't you look at my reserve study? And he goes, oh, no, I was too busy. I didn't have time. And I said, well, in actuality, you guys are $15 million short. And he looked at me and said, you're kidding, right? And I said, no. And he said, well, how can that be? And I said, when I did the reserve study, I concluded that the association needed $17.5 million. And so you take that amount and you subtract the money you have in reserve, and you have a deficit of 15 million. And he goes, oh man, this is not going to be a good meeting. And I said, well, it doesn't seem like it. So anyway, I had to explain to the unit owners why they were $15 million short. So that was a weird meeting, because they were like shooting a messenger and I didn't cause the problems, right? I was just there to give them the information. So that's what happened there. And the last case study is Kei Kilohana. And for those of you that are attending either on Zoom or on Facebook, and you're from other states, these examples are only for the state of Hawaii, and you probably have there's probably other examples that are similar in your own state, but because these are studies I actually did in Hawaii, that's why I'm using these as case studies. Now, this building, I did not do the reserve study, although I am familiar with the history on the reserve studies. What happened was, about a year after the development and the project was open, there was an increase in maintenance fees by at least $200 per unit. So that was about a 53% increase. And you may ask, well, what happened? And I'm of the opinion that the initial reserve study didn't have enough information to make sure that the maintenance fee was correct. So, and there's a ongoing litigation right now about the same issue, and it's hard to believe that the increase was totally due to operating expense increase, such as utilities and costs of water, gas, and electric. It has to be some hard capital improvement numbers that drove the number to be higher. But we'll see what happens. Now, some other buildings I want to talk about. There was one big building, and the reserve study was incorrect because you had major components, 3 elevators where the number was too low. There was one building in Makiki, high-rise building, where I did the reserve study, and the board said, we don't have $700,000 to do concrete spalling repair, so just cross it out of the reserve study. And I said, okay. And why did I do that? Because once I complete a reserve study, that reserve study is mine. I'm signing the reserve study, attesting to this is factory information. Once the board decides to make a change, as drastic as that, now that reserve study is not mine, it becomes a board issued reserve study. So what I did was, that's my client, I take direction from them. I took it out and I put a footnote on the bottom saying, per board's request, the spalling line item of $700,000 was removed from the reserve study. And then in my cover letter email, I said, by the board's action, they are actually violating the condo law. And I just left it at that, and it was up to them to deal with the problem. And then you may be wondering about the recent Florida building collapse, the reserve study. I know the company that did it, and basically the reserve study contained information that showed that the current funding was only about 7% of 100% total. So in other words, they were way short. I mean, that's a situation of the condo filing bankruptcy already. And that was part of the situation where they had all these studies and they just took too long to get with the program. And then it was too little too late. Now, before I get to the Q&A, I want to give you some other things such as suggestions, recommendations. If you're a realtor or you're a condo owner or you're going to buy a condo or you're a property manager managing condo buildings, here's a situation. If your maintenance fee is too low compared to other buildings in a similar area, that's a red flag. If your board has not raised the maintenance fee because they want to be nice guys and they don't want flack from unit owners, that's another red flag, especially if it's year after year after year. Oh, I'm the board president. Everyone likes me. I'm a good guy. I never raised a maintenance fee for 3 years, or there was a slight increase of 2 or 3%. Now, my question is, hello, if the inflation is 2 or 3% and you're raising your maintenance fee 2 or 3%, in actuality, you're not even raising it. It's zero. It's zeroed out. And can you tell me that all your repair and maintenance components is not going to cost any more money than it does now? You know, your roof that's supposed to cost $100,000 to repair or replace, you're telling me that next year it's not going to cost more than that? So be careful. Also, if you're reviewing a level 3, the numbers may be off because they're taking previous numbers and just massaging it or adding a increase or inflation factor to those same numbers. If the number is wrong and you add in a 5% inflation factor, now you still have a higher number that's still wrong. Okay, so that's just things to be aware of. Now, the best practice is to review the reserve study. And I can tell you, I talked to a lot of realtors and they request as part of the condo docs, your bylaws, declaration, board meeting minutes and all that, they request a reserve study. But who actually reads the reserve study? And if they read it, do they understand it? Do realtors actually understand the reserve study? And what about a condo buyer? They're not a realtor, they're not a professional in reviewing reserve studies. They don't necessarily know what they're looking for. They look at the bottom line and it says, 100%, or the numbers look good and they're not, short of anything. Okay, well, is that really true though? Okay. The other thing is you make sure you ask the question, what is this reserve study funding plan? Is it 100% fully funded cash, or is it a 50% funded plan? And in Hawaii, 50% funded is still legal. And I don't agree with that, but that's what the law is. Okay, so that's where we are. And if you're attending this webinar or Facebook Live and you're from any other state outside of Hawaii, there's actually to this date only 11 states that require reserve studies. So what does that mean? That means you got the majority of states that do not require reserve studies, and you may have a lot of condos that are underfunded, totally underfunded. The other thing is in Florida, for example, you have a reserve study law that requires a reserve study, but then if you have majority of owners voting not to fund it, then you have a reserve study, but you're not funding. So it's like a lot of things need to be changed in the reserve study law and requirements throughout the United States. Even in Hawaii, I don't agree with the 50%. I think it should be 100%. Okay, because that's reality. That's how it's going to work. Now, before I get to the Q&A, um, let me let you know about our upcoming webinars, the Ask Building Expert webinars that we're giving, and you might want to tune in. You can either register on Zoom through our website, askbuildingexpert.now.site, or you can tune in on Facebook Live. And so the upcoming webinars, let's see, we're in July. For next month, August, we have a discussion on the Florida building collapse, and that's going to be interesting. And then there's also a webinar that we're giving on fire, life safety, and high-rise buildings. And then the next month, we're giving a webinar on building safety. And that building safety webinar will discuss not only some fire safety, concrete spalling, but also stairs, railing, slip and fall issues, and that kind of thing. And so I hope you tune in and join us. And if you can't, still register on Zoom, and then we get your email and we can actually send you the link to our recording. By the way, all the previous webinars that I've given so far with Martin and I, Martin's a back-end guy. He's kind of shy, so he's not, wanting to be live, but I'll get him on live pretty soon. Anyway, our previous webinars are actually on demand. They're all recorded. They're on demand at our website, and you can go watch it anytime. We got a whole bunch of interesting ones on contractor licensing. We did one on cast iron drain piping. We did one on concrete spalling. So far, I think we've done about 12 or 15 of them. Anyway, I kind of lost count. But anyway, they're all free. The on-demand is free. Our live webinars are free. And we're doing this just to help the real estate and construction industry, help your condo buyers as a realtor, help realtors, property managers, and all that. So I'd like to, at this time, thank you for attending, whether you're on Zoom or Facebook Live. And I want to open it up now for questions. And I kind of like to streamline the webinar content, because a lot of times the Q&A portion is just as important or even more important. And a lot of times a person may have a question and you may have 10 other people that want to ask the same question. So I'm happy to help. Right now you have a live building expert here that are able to answer your questions. So please, I'm not asking you to pick up the phone and call us to make a donation. I'm asking you to go on Facebook Live or go on your computer or your iPad or your cell phone and ask whatever questions you want using the chat feature or the Q&A or the Facebook comment section. So Martin, did you just wake up, and can you join us so we can see if there's any questions?
Oh, no way. Your presentation is very informative. Now I understand how all these maintenance fees are really figured out and why they keep rising so much now. And wow, very good information. Yeah. But yes, we do have some questions from our Q&A on the Zoom side here. So let me hit those for you. The first one here is, how is the useful life of a component calculated? Are the people doing the reserve study just giving guesstimates?
Okay, in the old days, yeah, we're kind of like guessing, okay? But then we got smarter. And so here's how it's done today. The person that's doing the reserve study will actually, if he's been doing it for a while, he has already a data bank of previous reserve studies, and we look at those. So let's talk about a roof. How long is a roof going to last? What type of roof is it? Is it a flat roof? What kind of material is it? Is it a built-up roof? Is it a composition roll, pitch and gravel? And from our previous reserve studies that we've done, we're able to say this type of roof is only going to last 15 to 20 years. Okay? Also, you look at the location where the building is. Now, if we switch from talking about roofs to paint or concrete spalling, if your building is painted often, it's going to last longer. Okay, so let's say your building is located 50 miles from the ocean. Your paint is going to last longer than if your building was located right on the ocean. Right on the ocean, your paint is going to last probably 8 to 10 years. So the location is different. Also, concrete spalling is different. Concrete spalling is worse in areas that are in a marine environment, exposed to salt air, near the ocean, air spray, humidity, and all that. The other thing is, if you're talking about paint, we get data from the paint manufacturers. And that's how we determine from the warranty of these components how long specific component is going to last. So for instance, if the painting company says this paint is going to last 10 years, there's no way we could actually stretch it out and say it's going to last 15 years unless when we inspect the building, we determine that, hey, the paint still looks in good shape. We can extend the life another 1 or 2 years. So therefore, the paint warranty says 10, but we're giving it a 12-year remaining useful life. That may happen. Now, there's situations where there's air conditioning, and a board member may go, well, our air conditioning still works. It still looks good. And we look at the manufacturer, and the warranty is 20 years. But guess what? That air conditioner was installed 30 years ago. Then we have a right to go in and say, no, this component needs to be replaced at this time. Here's all the backup data. The other thing is, and I rely this a lot on this method, we call contractors in and have them come in and take a look. You know, hey, Joe, what do you think this air conditioning, what do you think about how long you think it's going to last? And he looks at it and he goes, wow, I checked out the components and all that, and this thing is basically shot. Although the outside casing looks good, the inside components are corroding, the bearings are worn, this and that. It's only going to last about another year. So with all this information, we have third-party valid documentation from licensed contractors or engineers or whoever we need to back up our number. So basically, it's not a guesstimate anymore. It's based on true hard data. And also, and I don't like to really use this, but I do, there's actually books, that reference books that we refer to, Marshall and Swift, RS Means, that actually have the component and how long it's going to last and what the cost is. Okay, and there's a multiplier. So you could say, if I look up a cost of replacing a roof in Oregon, there's a multiplier. Of course, it's going to be higher in Hawaii and Alaska. So that multiplier is a percentage. So you take that number, multiply it by that percentage, and it gives you, the more true or correct number. Okay, so good. Thank you for asking.
Thanks for that answer, Lance. The next question I got here is, what is the actual law requiring reserve studies to be completed?
In Hawaii, the actual law is HRS, Hawaii Revised Statutes 514B. And there's a section on reserve study, and that's the law. And the section actually states how a reserve study is to be performed, what components, what kind of funding method, and it's pretty detailed. And it actually, believe it or not, it requires the condo association to have a reserve study done every year for their budget and financial planning purposes. It doesn't specify what level of reserve study, although you should do a level 1 every 5 years. But um, so a lot of condos, they actually do a level 3 update year after year after year. And every time you do that without verifying things, of course, your numbers kind of get off over time. So basically, there is a law, and then in 10 other states, it's a similar law. So realtors or other attendees who are from outside of Hawaii, make sure you research the law that is applicable in your state.
Well, thanks, Lance. The next question here is a condo question, looks like. My condo has the board treasurer, who is a CPA, do the reserve study to save money. Is this method the right thing to do?
Okay, so the board is using their treasurer to do the reserve study. Okay, well, that's acceptable. Okay, and using a CPA or an accountant that knows numbers is fine, except that's only one portion of the reserve study, the numbers. If the CPA can verify components, and I would ask the CPA, did you go on the roof? Did you look at it? Did you inspect for spalling? How do you know what the condition of our cast iron drain piping is? So the qualifications of the person may not be such that he would be the best person to do a reserve study. So it's still allowable, but then I would question the qualification. So if he's only running numbers, he's basically doing a level 3. If he did a site visit, that's fine. But if he doesn't know what he's looking for, then there may be some erroneous information. So the best way is, if you're going to use a CPA or a board doing their own, or the property manager doing it, try to get as much data as possible. Get contractors in. Can you give me an estimate for painting the building? Can you give me an estimate if I need to replace my elevator? Those kind of things. Then you got better data, better numbers to plug in the reserve study. Otherwise, it's not going to be really that factual. And I've reviewed reserve studies done by CPAs before, and some were really nice, and some others were totally off. And it was hard for me to talk to a CPA, that's certified. That's what he does for a living, accounting and tax returns. But does he really do reserve studies for a living? He was just trying to do it to help the board out, so they don't have to pay the $2,500 fee to have a reserve study done. So it's acceptable, and there's a lot of property management companies that do reserve studies, but you got to ask, is it a level 3 update or is it a full level 1? Okay, so don't be afraid to ask the questions, because it affects you as a realtor, your client, and it affects you as a condo owner. Okay, so thank you.
Thank you, Lance. Get a couple more questions here. This next one is, when is it okay to change the remaining useful life of a component?
Okay, it's only acceptable if the reserve study provider agrees that they can change the number. For instance, the painting example I gave you, the painting is going to last 10 years. Now, if he inspects the building and he goes, wow, the paint looks really good, looks like it's going to last another 2 years, rather than replace it now at the 10-year cycle, only then should he change it. You should not change the time period of when you need to repair or replace just because you're massaging numbers and you don't have enough money in the kitty, in the reserve fund, in 5 years to replace your railing let's say. So you go, well, let's extend it another couple years. I've seen that done with railing, with concrete spalling repair, with cast iron drain piping. You're just using that reserve study and massaging the numbers to make the numbers come out so that you don't have to increase the maintenance fee too much. That's kind of working things backwards, and I've done that before just to look at what the numbers look like. But in reality, that's not acceptable, because if you need to paint your building in 10 years, you can't adjust the number to say paint it in 12 years. That's just you're trying to fool yourself. And then if you don't paint, now you have a spalling problem the repair of the spalling may cost more than the painting. So just have professionals help you.
Very good. Thank you, Lance. Okay, one last question here. Looks like a property manager. It says, I'm a condo association property manager. Many of my boards want to make changes to the reserve study to decrease the maintenance fees. I always tell them not to. Am I giving correct professional advice?
I would say yes, provided that the documentation shows that you're making the right call. So a lot of times a reserve study is completed. The board looks at it and goes, we don't have money. I feel sorry for unit owners who are on fixed incomes and all that. I don't agree with increasing the maintenance fee by 8% according to reserve study. So let's decide on 5%. So there's discussions among the board members, and then they agree to a certain amount, and then they take a vote. And let's say the vote is 5%, okay, and everyone's happy. But in reality, if you look at the professional that did the reserve study, and in his opinion, he says 8%, what's happening here? You're going against the reserve study provider. And if the reserve study provider actually, let's say, did a level 3 reserve study with no site visit, that reserve study could be wrong already. So the increase as recommended of 8% may not even be the correct amount. Maybe it's more like 12% if you really did a full level 1 reserve study. So along the line, there's like problems. So when you finally get to the board vote, they're actually voting on a maintenance fee increase that is not even acceptable if you had done a full level 1 reserve study and looked at what the recommendations were. Anytime you don't follow the recommendations of an expert, that kind of leads to problems. And the board may be liable. A condo board may be liable if they increased it only 5%, and the reasoning behind that was they felt sorry for the unit owners and they didn't want to increase and put a huge burden on the unit owners by increasing the maintenance fee. Okay, that's an emotional aspect of it. It's not a financial aspect. The true financial aspect, and you got to remember that a condo board member is elected to serve on the board as a volunteer, and their sole job is they have a fiduciary duty to protect the property. A fiduciary duty. There's a trust that the unit owners invoked in them to care for the property. So if you're feeling sorry for unit owners, and I'm not trying to be harsh, but I'm giving you the reality of what the law is in a condo law, that you need to maintain the building. There's no exemption in the condo law that says if the association does not have any money to fix the building, it doesn't have to fix the building. There's no law in that. Okay. If there is, can you please show it to me? And that's why I'm always saying the board has to protect the property. So is the board protecting the property by increasing the maintenance fee only 5%? Or are they not protecting the property and listening to their expert that they hired to do the reserve study that says you need to make an 8% increase? Okay, so there's a huge difference. And if you think about what happened in the Florida building collapse, as time goes on, it'll show that there were experts that provided information, and for the most part, it was correct information um, with respect to reserve study, engineering, and problems with the building, and the condo board didn't take the proper steps soon enough to get the problems resolved, get the repairs fixed. So I'm pretty sure it'll come out that way, and that's why there's lawsuits now, and it's no fun dealing with legal issues like that. Um, do we have any other questions on the Zoom or any Facebook comments or anything?
Let's see, Lance. I just checked Zoom. We got the Q&A questions, and checking out Facebook. No comments or questions.
Okay, good. If anybody has comments or questions that are on Zoom or Facebook Live, give us a call or email us, or um, go on our website. Our website has our contact information. Once again, is askbuildingexpert.now.site. And remember, it's free. The information that we're giving you is a lot of good stuff, knowledge, and it's based on my own personal experience as a building expert. And we're happy to help you. So I think we're going to sign off now. And once again, thank you for attending, and hope to see you at the next webinar, either on Zoom or on Facebook Live. So I got to go inspect a building now, so we're signing off. So Martin, you're going to end the Facebook Live?
It's done.
Oh, okay.
Once you signed off, it was done.
How do I stop the recording?
Just the usual.
It's not recording.